How's it going, fellow traders? It's Magic Trader here, and this is the CFTC report for data submitted on February 19, 2019. Here is a snapshot of the positions held by the institutions on these pairs. And so let's take a look at what the institutions were doing with gold. Look what we have here. Now, I've been telling you for many months now that we should expect a move to the upside into the area of supply, and then once price gets into there, for that supply to start being built up or filled in, and a push to the downside. And so let's take a look at what we are starting to see now with the positions. Now remember, the positions in the data that we have is based on this candle right here, which was consolidating before it pushed up into the area of supply. Alright, so consolidating before the push up, and what took place? A massive increase in longs from 214,000 to 254,000. Okay, you can see that shorts, not much happened with shorts, but the main focus here was a big increase in longs. And what took place right after this consolidation? A big move up right into the area of supply. So we should start to see in the next couple of weeks either profit taking on longs or heavy shorts being added. I think we're going to see a combination of the two. But so far what we're seeing here is very much in line with the bigger move that is expected here on gold. Alright, so let's take a look now on oil. So we have the big candle to the upside, and as that took place, they increased longs from 472 to 479. But the big reason for the move up is closure of shorts. Now remember, when shorts are added, it causes price to go down. When shorts are closed, it causes price to move up. So some longs added, but that wasn't the main focus. The main focus was the closure of shorts. Now, I think that this is going to take place on the charts. All right, so that means usually around here you'll start to see them adding short until they hit the supply, and then more shorts, more shorts, more shorts. So I think that is what is in play right now. It's still a little bit too early to tell because longs are still very aggressive. But if you take a look here, okay, look at what has been taking place since before Christmas, right? September, October, November, December. Very cooled off with shorts, and now slowly starting to get more aggressive. So that's what I'm watching for. And we'll see how it plays out. Still need more weeks data, and we still need to give this one time to climb up the charts. Now we take a look at the US dollar, and we see longs increasing and also shorts increasing, and that's as price was hitting supply. So why are shorts increasing? Well, shorts are increasing because we were reacting from a supply zone, and what's located in supply zones is supply. Okay, so selling positions, short positions. So we see about 2,500 get filled, but we also see them increasing their longs. Bottom line is net positions are in the positive. We used to be very aggressive with longs, but since then become somewhat more neutral. I believe what they're going to do is accumulate and push up, but we'll see if that is what takes place. Now we look at the Aussie, and so a slight push up here on the weekly chart, and some closure of longs, and an increase in shorts. So not much to see here in the latest week's data. Okay, but I think what is in play here is we see that they were aggressive here, and that's back in October right here. And I believe what's going to happen is they're going to reaccumulate a short and push price back down, getting these numbers back up to these numbers. But once again, it is still early to tell, but that is what I am watching for. As for the US CAD, price reacted exactly as we expected it to. off the weekly area of demand. And this candle here was consolidating, and what took place was a slight increase in longs and slight increase in shorts. Bottom line was we were extremely aggressive with long positions, became a little bit less so as this was taking place, and I think we're going to see a reaccumulation of those long positions, getting us back up to these numbers, and getting these numbers back up to here in the coming weeks. That's what I believe we're going to see. And now we take a look at the US Swiss franc. The data is based on this candle here, so it was consolidating at the highs before a drop, and we can see that steadily longs have becoming aggressive, okay, from 21 to 32 in such a short span of time. You take a look at the same span of time here on shorts, and they're pretty much still cooled off. So increase in long positions is giving us a hint that we're likely to see a move like that on the charts. Now we go over to the Euro US dollar, and we take a look at the data, and we take a look at the candles, and we know that this information is based on this candle here. So price had dropped, started to consolidate before a slight push to the upside, and we see that longs closed off from 157 to 145, which is very significant. And then we see shorts drop from 221 to 220. So nothing really big there, but net positions went up because of that big reduction in long positions from negative 63,000 to negative 74,000. Somewhat still neutral because of what it's been doing, but I believe we're going to see a continuation eventually take place. Now we look at the pound US dollar, and this data represents this candle here, and we see that there was an increase in longs and a massive increase in shorts, causing net positions to climb from negative 42 to negative 47,000. Alright, we're seeing a slightly more bearish tone here in the sentiment, but eventually we got the move to the upside, and this can literally go all the way up to that area of supply. So it's possible we see a continuation of a move to the upside before the larger move down. Okay. And now we go over to the US dollar Japanese yen, and we can see that shorts have been cooled off. Longs are somewhat neutral, although we did see a spike up over the last couple of weeks from 52 to 55 to 62 as price was rallying up towards that area of supply, and probably react from that supply, reaccumulate some longs, and then a push to the upside. Early to tell, but take a look at the shorts. Cooled off. They're not focused on shorts. Look at the longs. We're aggressive, took profits, and now possibly reaccumulate those long positions. And so now we go over to the Kiwi dollar, and this data represents this push upwards here, and we see slight increase in longs and very slight increase in shorts. Not much to see. Bottom line is very aggressive shorts became a little bit less aggressive, very cooled off on long. Very aggressive with short positions became cooled off. The territory, or I should say the sentiment. So you can see very strong sentiment here. Red, very aggressive. That's back in October right over here. And that's because all throughout here they were aggressively holding, taking profits, and what they could do is reaccumulate for a bigger push to the downside. Alright, so there you have it. That's the February 19 CFTC data. Hope you enjoyed it, and until next time, take care.